Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various asset classes and participate in the financial markets. So, good morning, Augustine. That's a good sign that everyone is on board, so we could proceed. Um, Now, this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video um, on YouTube at HFM Kenya, YouTube HFM Kenya. Search HFM Kenya, lead you to our landing page, like, subscribe, and click on the notification button so as to allow us improve our algorithms in our attempts to bridge the educational gap in the financial markets. Now I'll give a 3-second moment of silence to allow us proceed with that. Very nice. So without out of the way, we begin with our usual standard procedure of looking at fundamental analysis to see what we are looking forth to that will be moving the market drastically so as to allow us give low risk speculation to achieve possible profits. Now, all eyes today being on Wednesday, all eyes are on the Fed's interest rates decisions. And we have mentioned times without numbers that the Fed's is a short form for the Federal Open Market Committee, which is the central bank of the United States. And just like any other central bank in the world, the United States Central Bank, which is the Fed's, has two major roles, which are number one, to ensure favorable employment, and number two, to control inflation. Now, the meeting that is going to be held today is not a follow-up meeting in anticipation of past decisions that they have taken, but it's actually the meeting that we have been waiting for from last year, September 18th, December 2024, where we saw the Feds cut their interest rates to adjust the inflation in the US economy. Now, a question would come in, why the US economy precisely? It's because the US economy tends to influence the world in a larger scale compared to other states, and with great precision to the US dollar, which is the reserve currency. Right? I know the debates of BRICS, the dollar, the canceling out the effect of the dollar, de-dollarization, if you may like to call it that. Those are conversations that we could open later on, but as it stands, the US dollar dominance is quite significant. Now, back to the Feds. In their attempts to control inflation, they do this through monetary policy, which is to control the supply and demand for money in the economy. And for them to do this, they use the interest rate tool. Now, in amid speculation of inflation looming, they would have to cut rates, to adjust interest rates, and much more of the time cut the rates. But here we're seeing a unique scenario where we have them holding the rates. It is anticipated they are going to hold the interest rates at 4.5%, and with the previous also being at 4.5%. Well, remember, this is not what the President of the United States attempted to allude in his past speeches, where he said he's going to put pressure on the Feds to cut rates so that to reduce inflation in the United States. Now, the Feds are not directly influenced politically. It's an independent body, but at the back of our mind, we know that the chairman of the Fed, who is Jerome Powell, is an appointee of Donald Trump, of the President of the United States, and in fact, he was appointed by Donald Trump um, in his first term. With that in mind, it is also important to draw a very thick line that Jerome will not necessarily do what Trump wants because it's an independent constitutional institution. Now, with that said, now what is the expectation? We know that the inflation of the United States is not where they want it to be. Okay, so it's slightly above 2%. So they would want to adjust it to fit that context, but the best educated speculation would be to wait and see the decision they are going to make. Then from there, we are able to tell medium and long-term market direction. Um, Most likely, we will see a cut of the interest rate or a hold of the interest rate as the Feds drum up to charge up the Trump's administration. The Fed will possibly hold the rate steadily. What does this mean for the trades? And all eyes are now on Trump's next move as we walk into the future. Now, this is going to affect various asset classes. It's going to affect stocks. It's going to affect indices, which are a group of stocks. It's going to affect currencies. And also it's going to affect commodities. So it's quite a big day today during New York session. So let's go to the charts and see various anticipation in light of this. Now today we begin unusually with stock S&P 500 or US 500, where we saw the insurgence or the impulse move, which was caused by the DeepSeek AI particular in on the markets, which caused a huge bearish momentum from the daily time frame. But we can now see recovery to come and attempt to fill the gap. So we see the incoming of the DeepSeek aspect in the indices caused some sense of market volatility, but now it is recovering. So economic pundits would argue it was short term in a terms of the Chinese stock or the Asian stock, if you may like, to challenge the status quo of the stock, the indices space. Now we would want to see this gap being filled, a price coming and retesting this key level and possibly closing above in the attempt of that. Most likely, when you go to a lower time frame, we shall see it's loading. Let me go back. We will see price is attempting to close this particular gap, and so bullish trades would be much more convenient. On US oil, we have tested the 72.8 mark. We would want to see price come and close below. Please, Charles, stop drawing on the board. That's quite destructive. Okay, so we would want to see this price come and close below to proceed printing price to the downside. On gold, price is attempting to retest also the 27.79 mark. Would want to see price come and close above amid the tension which are brought about by the new administration of Donald Trump, especially in the famous double T, which is Trump's trade, which is causing a lot of tantrums in the global markets, causing volatility in this precious metal gold. On currencies, we see here at GBP JPY, which is a cross currency price ranging in between this key level, but attempting to have retested the 109.440. Would want to see price continue to print bullish and possibly come and close above the 198.960 to continue printing price to the upside to suggest a bullish momentum. For GBP USD, amid the upcoming Fed's decision on interest rates, would want to be very cautious with currency, USD related currencies. Those are major pairs. As we wait for this decision to come out to give us much more clarity, but as we speak right now, we were in a long-term bearish trend from the daily time frame, but we are seeing a little bit of correction, attempting to reverse this long-term bearish trend to possibly an uptrend. This recollection was caused by the positive PMI data from England and the Eurozone. Now we do want to wait for the Fed's decisions to give us much more market direction. Now, as a disclaimer, this by any chance is not financial advice. This is meant purely for educational purposes. It is important to be keen on risk management to give us longevity in the financial market so as to be able to be much more familiar with the context of the financial markets to make profits, possible profits in the long term. And as a call to action, if this is your first time or your subsequent time to get involved in the financial markets, if you want to know more or learn more, kindly reach back to your mentor or the one who has led you to this chart of the daily morning market call to guide you through the process of account registrations, and also get in touch with our various experts to allow you get familiar with the financial markets and get you rolling in your experience in the financial markets. With that said, at this point, see you guys tomorrow, the same place, the same time, to do things the same way. After the Fed's decision, we'll have a much more clear aspect of market direction. Until then, take care and God bless.